According to Knight Frank's Africa Horizons report, African markets stand out as a haven of high yields in a world of falling real estate yields, while equity investors from Asia, the Middle East, and North America are increasingly allocating more funds into infrastructure and direct property investment opportunities in key locations across Africa. CNBC Africa's Esther Awoniyi discussed Africa's potential as an investment destination with James Lewis. He's a partner and head of the UAE office at Knight Frank.
The continent offers a huge amount of opportunities. The scale, the population growth, the population demographics, the natural resources, the direction that it's taking, certainly by way of the Africa Continental Free Trade Area, which is progressing. So both investors and corporate occupiers, can see a massive opportunity in this. Corporate occupiers are looking to take advantage of the local growth, so are demanding better quality accommodation. And commercial investors, from a capital perspective, tend to follow those corporate occupiers and are looking to invest. So there's no shortage of global capital, be that sovereign, Africa institution, global institution, or even private, that are looking to capitalise and get a position.
Now, I know that within the on the African continent, it's not, there are just a handful of those key markets with those high yields, especially when it comes to the prime office spaces. Could you just help us identify, talk to us about those key areas, key countries on the continent where you see value and with those high yields?
Yeah, if we look at offices, say, and the Horizons report picks up on this, but offices are going through a transformation globally, and that includes on the continent of Africa. Somewhere like, say, Nairobi, the Silicon Savannah, where there's a lot of acquisition of local businesses, tenants are upgrading their space there and having a space of service or space in the impact in the war for talent. So they're looking to upgrade in order to secure and retain and good quality people. So there are pockets where the markets, certainly say the office sector, are infinitely more progressed and could be well akin to, say, a London or a New York, as African companies compete for talent.
James, could you speak to us on the potential of inward investments? According to the report, and of course, what you see going forward.
For inward investment, one of the more interesting sectors is hospitality, which we cover extensively in the Horizons report. And that's of interest because of the undersupply of quality keys, quality hotel keys, which attracts both tourists on holiday and clearly business travellers. At the moment, we're tracking about 535,000 keys across the continent of Africa. And to give that some context, that's like 5 LAs. So there's a huge scope for this to grow, and when we think this will double in the next 5 years. Linked to some of those hotspots, I suppose, are Seychelles and Mauritius, that we've in the report cited as sort of treasure islands. The hotels in these locations trade incredibly well and secure rates 40% ahead of centres like, say, Dubai. And when occupiers move into those, or operators move into that space, then investors follow on. So there's then global investment that would look to follow to acquire those hotels. So it'll be pockets, certainly the treasure islands, as we mentioned, but then equally some of those urban centres, the Joburgs, the Lagos, the Nairobis, for some of that business market.
Now, but how do you see, because projections for the future tell us about the growing middle class, increase in wealth, as you also mentioned, and of course the massive urbanization that we're going to see, and that bringing about more demand for spaces, both residential and offices. But in terms, just putting this into context for us, what kind of impact do you think this is going to have in terms of how investors decide on those areas with high yields, either here on the African continent or globally, or do you think that there will still be that focus on those key African markets?
I think one sector that we like to look at, what we mentioned in the report, and this is sort of linked to the growing middle class and more disposable spend, is healthcare. And healthcare requires care bed space. And we've done some analysis in the report and looked at Nigeria and Egypt. And in this particular sector, today, there's a shortfall of about 386,000 care beds in Nigeria. So to give that some context, that would equate to about 32 million square metres of care space for those beds, and warrant an investment of about 82 billion. So there's a huge opportunity there, and you know, with more disposable spend from say the middle classes or otherwise, and then that will be, I'm sure, of interest. But there's a lesson in this from say Egypt, which has deregulated and now allows the private sector to come in and provide some of this care space, and there was a huge gap there that's now been met to a greater extent by the private sector, you know, who are looking to come in and provide the services into you know, middle class and the disposable income. I think also linked to that is clearly food demand, food and beverage demand, which, you know, from $300 million per annum being spent on food and beverages in 2010 to over $1 trillion per annum by 2030, just in sub-Saharan Africa for food and beverages. There's going to be a colossal demand on agriculture. And again, this is another opportunity for Africa. At the moment, the report cites over 200 million hectares of uncultivated land in Africa, which is it's colossal, which is double the amount of uncultivated land in, say, Latin America. So there's a great opportunity there, again, in food and agribusiness to support that growing population and then the growing middle class. And some centres like Morocco, the Green Morocco Plan, and Zambia Development Act, Malawi has got a Greenbelt Authority, and Tanzania are perhaps ahead of the curve in looking for international investment to come in and to assist with that agribusiness to feed the local populations in the first instance, and then, you know, thereafter potential for export. So, I mean, all of the sectors, by virtue of the growth of the middle class and population, will see, you know, considerable uptick in demand, which will only fast track the maturity.
Now, for Knight Frank, I know that you connect your clients with, you know, prime and, you know, good spaces and real estate across the continent. I mean, I know that you have a lot of competition also, but tell us what gives you that edge in terms of how you help investors achieve good returns or yields on their assets across the continent?
Well, from a Knight Frank perspective, you know, we've been on the continent for a very long time. Our first office actually outside the UK was opened in Nigeria over 50 years ago. So we've got long-standing teams in each of these locations who are embedded in those markets and absolutely understand where the opportunities are. So yeah, we're well placed to uncover the right opportunities and to guide the minefield and make sure that investors and occupiers are as protected as possible.
But I know that you sort of paint a rosy picture, at least from an opportunity and investment point of view, but I know that it can't all be rosy. What are some of those challenges that you encounter as you uncover some of these assets, and for investors themselves when looking for a good prime real estate pieces?
I mean, from currency, local regulation changes, capital controls, etc. So there's a lot to navigate, and let alone, you know, the fundamentals of land law and making sure you have a title that provides you the security to then go to a bank to get financing, etc. So there are, you know, numerous factors that need to be considered and taken very carefully.
Well, which would you say maybe perhaps your top two most difficult to navigate or maneuver?
I'd probably say the fundamental of land law, you know, ensuring you've got title, and that can't then be taken away from you, which you know, with that secured will permit either external investors to come on board with you, or indeed for you to go to third-party banks. So at its most basic is that land and quality of title.
I know that you mentioned some countries in terms, for one, in terms of income growth, the middle class. But I'd like you to tell us those regions you see going into the future could be the most profitable from an investment point of view for investors looking for good real estate.
I think, again, it comes back to sectors again. I quite like to look at the sectors and then apply the sectors into the geographies. So if looking, say, back at the hospitality sector, you know, understanding the dynamics of the hospitality sector in some of the major centres, you know, Egypt has got a good amount of hospitality keys, South Africa's got a good amount of hospitality keys. There's lessons that can be learned as to how those two centres have developed out hotels and apply them into different geographies for different needs. And we touched on before about, you know, business travellers, you know, coming in and out of Joburg, coming in and out of, say, Lagos. You know, there is a format for, say, developing a business hotel that you know, it doesn't vary too much from from one centre to another. So if you get the model right, you can broadly apply it into those other centres, assuming you've got the land law and all the other title bits to provide comfort and ensure you've got an investable title.
Now, you mentioned a couple of names, countries, in terms of those that have a favorable, that are favorable towards inward investments in agriculture. You mentioned countries like Zambia, Morocco, and Malawi. Just speak to us about the potential there and what exactly investors, the level of investments we could see going there.
Well, I think the potential there is you've clearly got willing legislators who've come forward and created a framework that's going to give people comfort. And linked to that are tax breaks from an international investment point of view, which allows you to repatriate profits, etc. And then also linked to that is clearly to entice investment on things like water supply, etc. So I think at its core, if the authorities are addressing some of those international concerns, then that will help get international investors become more comfortable. And each one of those each one of those countries has got slightly different themes because they've got different agricultural foodstuffs that they produce. But nonetheless, taken in turn, they each offer something that overseas investors would be keen to look at. But I would stress that there's a lot needs to be done by way of food production for local needs before perhaps export or international food security, say, comes into play.
Now, finally, I know you say, the report says that, we're living in a time where, at least globally, we're seeing falling yields on real estate, but Africa, of course, is still having more of that potential. Do you think that this is, to what extent or how far do you think that this could remain the same? What are those factors that will keep the African continent on that, let me not use the word pedestal, ahead of the global real estate market?
I think, as I say, it's led by the occupier. There is so much for the real estate sector to provide for tenants and for the occupier, for them to run their businesses efficiently, to then capture local opportunity. That gap is considerable. So if we focus on getting good quality space for occupiers across all of these sectors, then investors will follow on thereafter. So I think that it will remain a compelling proposition, whilst we build out as an industry, more appropriate accommodation that is fit for these modern commercial occupiers.
And that was James Lewis. He's a partner and head of the UAE office at Knight Frank, speaking to CNBC Africa's Esther Awoniyi. And that's a wrap on Beyond Markets, and thank you so much for joining us. Remember, you can watch the show at 5 p.m. West African time daily and have access to all previous episodes of Beyond Markets on our website at cnbcafrica.com. You can also stay engaged with the hashtag Beyond Markets and follow me at Kenneth Igbomo. Have a wonderful evening.